Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar continues to at least hold its momentum over the last few days. The market's been relatively bullish and it's taken somewhat a slight step back in front of the level around 71.2025 to 71.65. Nevertheless, I see this as more of a sort of a breather for the bulls and just taking a pause in their up step and then eventually see the market rally on to claim its target, which I've outlined here around 71.60, which may eventually see profit taking emerge. This week, all eyes will be on the Reserve Bank of Australia's monetary policy meeting minutes. Along with that, we've got the Reserve Bank of New Zealand rate decision, which expects a 50 basis point rate hike from 2.5% to 3%. And also we've got the core retail sales and also the Australia's employment change and unemployment rate update. Any pullback for the Australian dollar, I see support around 70.75 as minor, and most probably expect to see a good round of demand around 70.30.35. Looking at the euro, well, the market seems to have taken a slight step back after the inflation seems to have overturned a corner. With optimism slowly seeping back into the global markets, some investors grow more convinced that the economy in the US may avoid a severe downturn even as it copes with high inflation. Over the last 2 weeks, boosted hopes that the US Federal Reserve may be heading for a softer landing for the economy after last Wednesday's economic report showed that the US July Consumer Price Index, or the CPI, contracted more than anticipated and was down by 8.5% year on year from 9.1 in June, while an annual base, that is the Producer Price Index, the PPI, a gauge of final demand wholesale prices, rose by 9.8 in July, the lowest since October 2021. The dollar index, meanwhile, which measures the greenback strength against a basket of 6 major currency, rebounded slightly from the low 105 to 105.52, which was up about 3.3%. Looking at the technicals, I do anticipate that the market has found a bit of a short-term cap close to this region around 103.45. With a pullback most probably in the making, could give opportunity for those that are looking for a potential trade, as we recently broke above that 102.70-80 area. We can see that now the market is just hovering around this region. In light of the pattern, it could see a pullback to about 102 figure 15, but I feel there is further bullishness in store and eventually see the euro claim the top side of its target around 104 figure 35 and reassess. The dollar yen, well, the market overall was a little bit on the mixed side on the start this morning after the recent 2 days of bullishness, hit a wall of resistance around 133.80.85. Now, as long as we see that level hold, and from the technical aspect, could, due to the RSI buckling and also moving away from the midway point, and the RSI is negative, that we could see a pullback. That is towards the region of 132.70 as minor, and most probably find bulls return around 131.85.95 and reassess. Looking at sterling, the market was a little bit weaker on Friday after the Office for National Statistics, the ONS, reported that the UK economy contracted by 0.1% on a quarterly basis in the second quarter, but grew at an analysed rate of 2.9. These readings were slightly better than expected, but still failed to inspire any renewed demand as the market backs away from the 122 region. I do anticipate that the weakness may continue on, but find demand around 120.70.80 and then expect a bounce back towards 122 to 124. Looking at gold, well, the market still seems a little bit hesitant in taking the challenge or breaking beyond the 1,800 to 1,806 resistance, seen as a clear level, as a point of potential bear factor that supply may overcome again any challenge. Then the RSI dropping as well, then we could see a pullback to 1,794, which is near enough where we are now, and lower to 1,778 to 80 and reassess from there. If this pattern does continue, then furthermore we could see a drop back towards the region of 1,755 to 60. And wrapping up with oil, well, we are a little bit weaker after Friday. Nevertheless, I feel that the bulls are still lurking and therefore could see a rebound anywhere from the region of 90.5 or around 89.5, and therefore see a challenge taken back towards 92, 70, 90 to around 94 to 96. I don't want to get too bearish at the bottom of the range, and I feel the market could easily snap back into a high volatility price action and therefore push to that top side. Well, that wraps it for today. Thank you very much for joining me. And as always, look out for the intraday report, and I hope you enjoy the great start of the week.